Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
It's hard to understand, at least for me, the ISM Services Index. John was just saying, comes in a bit light, prices paid coming in light, employment coming in light, and new orders coming in light. But like some of them are still over expansion. So we got to get to the guy behind the data. Anthony Nieves is chair of the ISM Services Business Committee, and he is here with us to help break down this data. Is this a good report or is this a slowing bad report?
I look at it as being a good report. And the reason being, as we know, the baseline being 50, we're still experiencing growth month over month. So even though we had this pullback of 1.2 percentage points to the 51.4 from 52.6, activity still looks fairly strong. It's up 0.2 percentage points. And new orders, which tells us what's in the pipeline, did come down 1.7%. But again, we're north of the 50 baseline. It's at 54.4, which indicates that we'll have continued growth. As you mentioned in the prelude, that we see employment and deliveries are what's pulling down the composite index here.
So again, as we think about the services part of the economy, the major part of the U.S. economy, again, just for our listeners and our viewers, anything above 50 is expansion. So that part of the economy is still expanding. Is that the way to think about it?
Absolutely. And we're measuring change month over month. So what we're seeing is just a slowing in the rate of growth. And the employment picture continues, as I've been saying for several months now. It's a mixed bag. 48.5, it's down 0.5 percentage points. And what the respondents are indicating is that, they're very cautious and it's a controllable expense for them. And so interesting, some of the respondents indicated in their comments that even though business activity is still going good, that they're not hiring, they're holding back, waiting to see how things materialize in the upcoming months. Because as you mentioned about pricing still shows increases month over month. It's strong, but it's somewhat stabilizing from where it was in the past. And where we see the most volatility continues to be in the food items.
Do you get the impression when you talk to the respondents that they're going to have to look at layoffs, or is it just more about hiring more?
It's a combination, and it depends on the industry. It varies by industry within the sectors, within this sector, I should say. And certain industries like accommodation and food services is continuing to hire, whereas we know with the slowdown that we experienced in the past with real estate rental and leasing, they are not hiring.
All right, Anthony, thanks a lot. We really appreciate it. It's always good to get the details here. Anthony Nieves, chair of the ISM Business Services Committee. Again, that overall index, still in expansionary territory, but definitely still slowing down just a little bit.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
This is Bloomberg Intelligence Radio, where we bring you all the amazing work from our Bloomberg Intelligence analysts. They cover over 2,000 companies and 140 industries all around the world. And one of them is named Tim Craighead, Bloomberg Intelligence Research Director for Content. Fancy title. And the reason why is because he came up with a really great list, along with his teammates, about 50 companies to watch in January. They came up with that, and that was the ones you got to watch for this year. And they're now back with 10, specifically just for the second quarter, based on scenarios from Bloomberg Intelligence. You want to get the good apples from the bad apples, cross-sector, cross-regions, and he's here now to help us break it down. Hey, Tim, thanks for joining. Okay, so what are the top 10?
So, Alix, thanks for having me on. A couple of things to keep in mind here. Top 10 for 2Q. These are part of a broader set of focus ideas that we've got. There's roughly 75, 80 of them right now across sectors, across regions. These specifically have important catalysts coming up in 2Q that we think can bring the market around to our perspective. All of these focus ideas have really strong, high conviction, fundamental views that we think are different from the market, and these catalysts should bring that awareness around. It's a group of U.S. Companies. There's 4 of them. There's 3 in Europe, 3 in Asia, and they span the gamut from healthcare, med tech products to big financials to tires. So interesting group.
And Tim, one of the ones that I've been kind of thinking about. I just think these Olympics in Paris are going to be just huge, and I'm thinking about ways to play it. You guys have one of them in the lodging space. Talk to us about that opportunity.
Yeah, we do. Accor. It's a big French hotel company. You might not know Accor, but you probably know some of their underlying brands. Yeah. And anybody who's made a hotel booking as of late knows that the prices seem to be really high, surprisingly so. That's feeding Accor's RevPAR, their pricing, which is playing through into profit margins. And the catalyst for these guys is, in fact, the Paris Olympics. We should start to see early booking data over the course of 2Q heading into Summer Olympics. Now, Paris is only one part of their portfolio. They're across Europe and Asia, and we're seeing a strong, sustained travel recovery story that we think is better than consensus expects.
But apparently they have to clean out the Seine. Did you read that? That yes. There's so much
I'm not going in there.
Can you imagine being an Olympic swimmer and there's garbage hitting you in the Seine? I mean, they're working on it. They're definitely working on it. Okay, your second one is in retail, Chow Tai Fook. No one's going to know this company here in the U.S. So tell us about it and why this makes the outlook.
Yep. So that and the next one on the list from an alphabetical perspective are both sort of interesting twists on the same underlying theme, and that's China. We all know that there's problems in China from the standpoint of the property market and how that's playing through in terms of sentiment, the wealth effect on spending plans, etc. Chow Tai Fook is arguably the best known Chinese retailer when it comes to jewelry. And it's a big market historically for tourists and travelers coming into Hong Kong and to make those purchases. In fact, what we're seeing right now is Hong Kongers are going out of Hong Kong across the border into mainland China to shop for pretty much everything because it's cheaper. So you combine that with negative sentiment, we think Hong Kong retail sales are going to disappoint, and Chow Tai Fook is a poster child. The other one, CSC Financial, is one of the largest Chinese brokerages, good old-fashioned, wealth management. And there, the investment banking business, we think, is set for disappointment because IPOs and other new stock listings are way underwater. And we think you're going to see investment banking revenue disappoint.
I was looking through the list here, Tim, and I was looking for a name from Michael Dean and the European Autos team, and I think I found one in Pirelli Tires.
Yes, indeed. I started to say if you're an F1 fan, but that's more from a European perspective than NASCAR in the U.S.
Right.
But Pirelli is a well-known tire maker. And what they're doing is twofold. Number one, upgrading their mix. They're getting rid of some of their lower end products. And number two, they've taken on a pretty big initiative to shift production from core Europe to places like Romania over here and Mexico over there, all of which is driving better margins. And we think that this is going to continue more than what consensus currently bakes in.
Plus, it's from one of my favorite analysts over in our London office, Gillian Davis, doing some good work there. So good stuff.
Home building. Taylor Morrison made the list. That's not normally the company you think of when you think of a home builder, right? You're thinking Lennar, KB Homes, etc. How did this one make the list?
Yeah, I mean, they're continuing to expand specifically in some larger developments in Florida and Texas. And it just seems to be a case of good old-fashioned running the numbers with those expansion plans feeding through and their order book coming through better than anticipated, where we think there are positive surprises ahead. But it certainly is, it is a classic story from the standpoint of expanding order books, expanding volumes.
One name that's on there that's surprising, but I think it's a potential real opportunity here is Tencent. Talk to that big Chinese e-commerce, because for a lot of people, Tim, as you well know, China is kind of taboo right now from an investment perspective.
It is, especially when it comes to technology and regulatory concerns and, Beijing focusing in on, what the big tech companies are doing. Historically, these have Tencent's driven by online gaming. And that growth rate is still somewhat muted, but there's more video that's coming through. There's AI-assisted advertising that is growing. Both of those are drivers of their income statement that we think are underappreciated. We think it's mid-teens growth going forward, but if you do the math, the market seems to be discounting basically static to maybe low single-digit growth rates, and so it's just a case where we think the market doesn't realize that they're back to having good, solid forward growth.
Yep, it's going to be, it could be a really interesting story. A lot of folks, again, really not sure how to play that part of the market. Tim Craighead, thanks for joining us. Always appreciate getting your thoughts. Tim Craighead, Research Director for Content. He's also got a day job, European Equity Strategist, and we appreciate getting some of his times from Bloomberg Intelligence. He's based in our London office, the Queen Victoria Street offices, which are just awesome, right in the city of London, right near the Bank of England. You can't get more city of London and heart of the financial system in London than the Bank of England. And that's where Bloomberg has their offices.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Intel, disappointing outlook, stock down 7%. It's one of those chip makers that's really bucking the trend here. It's down 19% year to date, while you got some of the others, NVIDIA, Broadcom, putting up just extraordinary gains. So it feels like Intel's missing that. So let's break it down a little bit more for Intel and the chip names, tech, the markets overall. We can do that with our next guest, Kim Forrest. She's the founder and chief investment officer at Bokeh Capital Partners, I believe located in Pittsburgh. Lovely city. I'm a big fan of Pittsburgh. All right, Kim, on your list, on your notes, top picks continue to be Intel, AMD, MU. Let's start with Intel. What is Intel just not getting right here?
Sure. Well, a couple of things. They are coming up a very steep hill from where prior CEOs left them. And what happened was they kind of fell behind the curve in making sure that they could make the very fastest, best chips they could, and their technology just floundered. That's pretty much the short answer. Now, Pat Gelsinger was a longtime Intel employee, went over to run VMware, came back to Intel, and he's been trying to right the ship. But more than that, he's been trying to make them into a foundry for other companies that design chips. So this is a long and arduous process. Becoming a foundry is They've done that for specific companies in the past, but they want to make it more broad, like akin to what Taiwan Semiconductor can do. And they're just going to have to come up the curve and spend some money. So they have the 1-2 punch of spending money and then not having that hot AI chip, which is what is driving everybody else in the world, apparently.
Yeah, exactly. So I'd love to just get your AI call, if you will. How much do you believe in it? How big can it be? And how are you guys maybe playing it?
Sure. Well, a couple of things. You have to understand that before I came over to this side of the world, finance, I was a software engineer doing AI. Like, how lucky is that?
Okay.
I know,
She's really
right?
cool. She's super cool.
Yes, nerd girl right here. Anyhow, but moving on. So I believe in AI, and I think a couple of things that are going to drive it forward. First, we have enough data. We didn't have enough data in the 90s when I was doing it to be able to meaningfully understand the world through the lens of AI problems. The second thing is we have cheap, fast computers. Again, we're spending a lot of money on these computers, but for the compute power back in the day, these are incredibly fast machines that are incredibly cheap. And the third thing is, and I always look through technology with this lens, is we can actually make AI be productive, right? Like help humans out. And I think putting those three things together, I'm a strong believer in it. But the caveat is this: it's not going to happen in the next 15 minutes or even next year. It's probably going to take 7 to 10 years for this really to play out and to change the world in fundamental ways, much like the rollout of the internet was.
So Kim, how do you play that then? Like, is it not an NVIDIA play? Is it going to be a different kind of play?
Well, I think you're going to have to cast your net a little wider than NVIDIA. I love NVIDIA, but they do have a reputation for making the fastest chips at the highest prices. And that's why I'm a believer still in Intel, even as it rolls that rock up the hill to correct itself. I think that it can do that. And I also think AMD is a good supplier as well. And people building AI data centers aren't going to want to spend the bucks for NVIDIA in perpetuity. And I think that's just what is going to drive those two names.
This
Micron.
is why Kim's so cool. Yeah. Go ahead, Micron. Go ahead.
Okay, yeah, and I love to be cool, like nerd girl cool, but still cool. Okay, but I'm back. So Micron, I can't underestimate or understate this or overstate this enough. That's what I mean, is that AI needs a lot of data, like tons and tons of data. And I won't get into it. That's beyond here. There are really good reasons why, but you're going to need tons of data and you're going to need to store it in duplicative ways. And so any bet on storing data is a good bet right now. And I think Micron is among the leaders of NAND storage, which is kind of non-volatile chip storage and not a spinning disk. So that's the shortest answer I can get for that one.
Kim, I have an ancillary. This is totally talking my own book here. What about power plays in relation to AI? Just because if you want to run all this stuff, you need a ton of power. And the amount of money that these companies are going to be willing to pay for it has got to be astronomical, considering that we haven't seen power demand grow at all in 20 years. Are you playing this derivative play at all?
Not yet, because I don't really see a good way to do it. You know, you could buy like certain power companies that are probably physically well positioned, that have assets that are somewhat cheaper, where the companies will build their data centers. That's one way to do it. It's too long of a play. Like, I'd rather stay back in the AI kind of direct space rather than that, or even, you know, the data center providers. You could play it that way too. But again, I like my margins a little higher than those end markets.
Fair enough.
Hey, it's interesting, Kim, we're thinking about Tesla. I want to get your opinion on it if you have one. I mean, the stock's down 32% year to date. Boy, has the tide turned on that name, the sentiment turned on that name. Do you have an opinion on Tesla here?
I've never invested in Tesla because I like my CEOs more focused than Elon Musk. But that being said, like, it is a battery storage play. And your other question, Alix, was on power plays. Maybe batteries are going to be one of the ways that we allow for the build out of electric power. So I think they have more than one product there. I think EVs have also been overrated, and people didn't do enough use case scenarios. Like, I have family that lives in North Dakota. There's no way they could ever have an EV. It gets to -23 there, a lot, right? You can't charge them. There aren't enough towns where you could pull over and, recharge. It's just like, I look at use cases like that, and I know that not everybody lives in North Dakota, but enough people do, enough people live in the North that these things are not necessarily ready for it to be your only car. And I think that's a little bit behind it. I think they make a good automobile, and I'm not sure people are just dying for that Chevy Volt or whatever they're making. So I think they still have a product, and they still have a certain cachet, and they were a good first mover in EVs. So I wouldn't throw them out necessarily.
But funnily enough, my work cars recently all been Teslas.
Really?
I don't know what that means, but that means something. Maybe they're, as we're talking about Ed Ludlow, like there's actually more Teslas now because no one's actually buying them, so then you can
That's
lease
because
them.
you're living in the tree hugger capital of the world.
Yes, I live in Park
Not
Slope
that there's
in
anything
Brooklyn,
wrong with that.
okay? Yeah, but not necessarily my drivers don't necessarily live there.
Michael
I'm just
Barr's
saying.
not taking a EV from Eastern Ohio here.
I'm from Pennsylvania. We are a lot of pickups out.
He's got a smokestack
Yep.
on top of his car.
Kim, before we let you go, do you care if the Fed cuts rates or not, and when they do it?
Oh, sure I do. Heck yeah. I mean, I think we're signed up for a rate cut, and I'll say it even crazy, relatively soon. I'd say before July. And I do think that they need to cut. The dollar is awfully strong relative to other currencies, and that might be able to cool us off a little bit more on that. And I think that's important because even though I'm a generalist, I love technology. We sell technology to the rest of the world at the price of $1, and we have to have that in mind.
Kim, thank you for joining us. As always, appreciate getting your views there. Kim Forrest, she is the founder and chief investment officer of Bokeh Capital Partners in Pittsburgh, a former software person, a tech geek by her own admission. So good stuff there, talking about AI. And boy, that Intel news that John was reporting earlier, having problems with the foundry here.
Yeah.
It's one of those chip stocks that is not participating in the whole AI rising tide thing like it is for NVIDIA and Broadcom and others.
Well, talk about a long play, right? Because if they can get the foundry business really going, it could really help them either make chips for themselves and then also make it for others, and it could be a nice driver. I mean, just look at the revenue that TSEM is minting, but you got to get it there, right?
You got to get it there.
And it's just not quite there yet.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Matt Winkler joins us here in studio. Matt Winkler is the founder of Bloomberg News. As the editor emeritus right now of Bloomberg News. He joins us here in our studio, and he's been doing a series of opinion pieces about key swing states in the upcoming election and giving us the latest on kind of how the economies are doing in those key states. We started with Michigan, I think, and then we did California by looking at LA and San Francisco. Now, heading down to the great state of Georgia. Matt, what did you find in Georgia? I love Georgia. It seems like it's been growing for, I don't know, 20, 30 years. It's a great story.
Well, great to be with you. And you're right. Georgia, population of more than 11 million, makes it the 8th largest state. And it's booming right now like it never did before Joe Biden became the 46th president. And we know this because not since data was initially collected in 1990 has there been a 3-year period when growth in the Peach State's manufacturing payrolls came close to matching the 11.9% increase in jobs since 2021, or its rate of employment gains compared with the U.S. overall. And that's according to data compiled by Bloomberg. So we are seeing a manufacturing boom, job boom in Georgia, the likes of which Georgia has never seen. And by the way, this is counter to the trend in the 21st century. Every presidency in the new century except Biden's has seen a decline in manufacturing jobs. So this is a departure.
So how much of that do you attribute to the CHIPS Act and the Inflation Reduction Act? Because something that gets lost in all this messaging is with the IRA, for example, so much of that money is actually going to red states because they have the space to like build stuff.
Well, there's no question that actually red states are a big beneficiary, but it's not just the American Rescue Act of 2021. It's also the Infrastructure Investment Jobs Act, the CHIPS and Science Act, again, the Inflation Reduction Act, all of which have helped Biden make a legitimate claim, which is he created close to 800,000 manufacturing jobs since he took office. And we know this is not an idle boast because those very careful fact checkers called PolitiFact actually took a look at this claim, and they showed that the nation's manufacturing rebound is the strongest at this point after a recession since 1951. You weren't around then.
I wasn't. Paul wasn't either.
No.
Let's be fair to Paul.
We'll leave it there. I'm not sure. So is Georgia per se doing anything right versus? I mean, is this all just the largesse of the federal government, Matt, or does Georgia have just better incentives, better tax incentives? Are they doing something maybe some other states aren't doing well?
Well, there's no question that some of the credit has to go to, as I said, these acts, because the investments include, for example, South Korea's Hanwha Solutions Corp. Expansion of solar panel and manufacturing. They were already there. They got incentives to do a lot more than what they were doing. The same thing with Hyundai, with EV vehicles. They're already there. They're doing more. And then there's this battery company from Norway, Freyr Battery, which is going to make clean battery manufacturing in Coweta County in Georgia. So those things are definitely tied to the incentives that come out of these acts. There's no question state and local officials have been supportive, but interestingly enough, the governor of Georgia voted against, or would have voted against, the Inflation Reduction Act. All of the Republicans in Congress voted against the Inflation Reduction Act, which is a big part of why Georgia's doing well. But they're not ready to give the money back.
Of course not, no.
They're very happy that it's all happening.
We have seen with some of these acts that we get all excited about the money that's being spent, but then getting the shovel in the ground and actually doing the hiring and the manufacturing gets delayed a little bit and gets pushed out, or the plans get scaled back a bit. Are we seeing any of this in Georgia, or is the outlook particularly rosy?
It's more of the latter, and again, the proof of that is that if you look at the unemployment rate in Georgia, it actually declined most recently, and is several percentage points, less than the national average. So, unemployment in the U.S. actually has ticked up a bit. In Georgia, it's gone the other way. And that's an example that the boom is very much underway and shows no signs of abating.
You have to remind yourself, how the economy in the South has really changed from, agricultural, textiles, very low technology touch types of industries, to now it seems like every new auto plant that, international automakers, they want to build them in
and movie studios too.
So much investment's going to the Southeast, and that's again been a 30-year story. What's next on your list?
The next state.
Yeah, what state is next year?
We'll probably get to Nevada. I think. So we've done Pennsylvania, Michigan, now Georgia, and we're working through the list. Nevada.
So if you were advising President Biden, his campaign, about the messaging here, what would you say in terms of, because I would argue that the messaging has not been effective, that this message of economic success has not been told well.
I'd say actually their messaging has been pretty good. A lot of this data that we've compiled at Bloomberg is available in various announcements from either the White House or the Treasury. But the saying is, you can lead a horse to water, but you can't get the horse to drink. The horse in this case is our profession, the media, and it's pretty much ignored what's in front of its nose, which are the facts. So unless reporters find this relevant, I do.
Which is why we love having you on for it.
They'd rather focus on polls, and so that's perception, not reality.
Before we went on the air, you made a comment about California. How big is that economy now? Because to me, it was the 7th or 8th largest economy in the world.
It's number 4.
It's now number 4.
And it's poised to overtake Germany. And that's because if you keep talking about the Magnificent Seven on this show. And, if you look at corporate California just dwarfs corporate anywhere. It dwarfs corporate Texas. It dwarfs corporate Germany. Corporate California is still a juggernaut. And you know who those companies are. But it's not just the big companies. It's big and small companies alike in the Russell 3000 that make California unique.
It's just extraordinary. All right, Matt, thank you so much for joining us. Matt Winkler, he's the editor-in-chief emeritus. He is the founder of Bloomberg News, and he's now part of Bloomberg Opinion. And he joins us here in our office talking about the great state of Georgia and the strong economic performance our friends down there are seeing, particularly, manufacturing and employment. And for my media business, they've long been a destination.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
So here's a stock for you, Avantor. It's up about 10% so far this year, done pretty well. The talk on the street is that it wants to be really a mini Thermo Fisher. So nice. Part of its business is a supplier of R&D labs for the global pharma industry, and now it's trying to make a big push into bioproduction. So that's basically the equipment of manufacturing biologic and biotech drugs. Luckily, we have the CEO and president with us to help understand what this company does, what's the opportunity, what's the margin, what's the growth. Michael Stubblefield is president and CEO of Avantor, and he joins us now from Allentown, Pennsylvania. Michael, thanks for joining. Walk us through, dumb down what you guys do for people like me and Paul.
Yeah, Alix and Paul, thanks for having me. Really happy to be here today. I think it's a great place for us to start the conversation today. We're probably one of the bigger companies that a lot of people have never heard of, and we are really ubiquitous in the biopharma space. I would say we enable innovation across the life sciences and advanced technology industries, and we really embed ourselves with our customers. We support them every step of their scientific journey. We're in virtually every research lab around the world, more than 300,000 locations. And we have a really robust portfolio, an e-commerce platform, and a whole host of productivity enhancing services that really help the scientists at our customers develop the new therapies that you're referencing. And as those innovations advance to development and production, our materials and technologies become embedded into our customers' applications, everything from biological therapies to medical implants to electronics.
So, Michael, give us a sense of maybe who your, a common customer, or an average customer of your company. Who is your customer base, and what do they really look to you guys for?
You're really not going to be able to find too many customers that are doing work in the biopharma or the biotech space that we wouldn't be serving in some capacity. I think that's one of the more interesting aspects of our business model, is that we are deeply embedded across this space. And so it's everything from the traditional large pharma, the Johnson & Johnsons, yep. Amgen, Novartis's of the world, all the way through to a lot of the startups and biotech companies that are out there. We have an exclusive relationship with one of the bio consortiums here in the U.S. that literally thousands of biotech startups access our products and services across that platform. So we're extremely well positioned to serve this space.
And so basically they come to you for stuff, right? Like, hey, I need this ingredient to do this thing, or I need this piece of equipment to do this thing, right?
Yeah, I'm not sure we would call it stuff, but that's
we break it down for you here, Michael.
To talk about it. So we have, you can almost think about, there's nothing in a laboratory that a scientist would need that we don't supply. We have over 6 million products. That's everything from chemicals and reagents to equipment and instruments to, plasticware and glassware consumables. Think about just what a scientist needs in order to conduct their research in a laboratory. They would be able to procure from us. We look to be a one-stop shop to meet all of our customers' needs within that laboratory environment. And one of the things that we really focus on is, bringing efficiency, to our customers. A lot of the discussion in our space is how do we return time to the scientists so that they can really focus on, pushing forward these breakthrough therapies that are, really game-changing for patients around the world. And so we have, in addition to the products, a whole host of services and digital capabilities that we deploy, really all meant to improve the efficiency of how a lab works.
I'd like to ask, when we talk to healthcare companies anywhere within the space, I'd like to ask this following question. How is your business impacted by the pandemic, and maybe how is it different today than it was before? Because it just seems like that whole corner of the healthcare space really had to adjust.
Yeah, it was certainly a very interesting time from a lot of different aspects. And, I think it's important to point out that we did play a really important role in, helping address, the pandemic. A lot of our materials were being used to produce, the vaccines, and as well as a lot of the materials that needed to go in to produce the tests to detect COVID. But there's probably a couple of different dynamics that I would point out that we experienced during the pandemic. First, really unprecedented supply chain constraints. There was shortages, throughout the value chain that made executing our supply chain, rather challenging. We had, significant step up in demand to support, some of these COVID-based workflows. And then as things started to normalize, of course, our industry has been facing some of the headwinds associated with just normalization of procurement and supply chain trends. So it's been a really dynamic time, but I think we've weathered the storm well, and we've offered a lot of value. During that process, continue to focus on executing our growth strategy, and we're really pleased with how we're positioned coming out of all that.
So as I mentioned, the stock up 10% so far this year. 0 sell ratings, 6 holds, and 15 buys with a 12-month price target of about 27. We're almost there. We're like a stone's throw away from that now. I was talking to Jonathan Palmer. He's our Bloomberg Intelligence guy who covers your company. And he was saying that the debate now on the street is when you can really return to growth and show some profitability improvements. When is that?
Yeah, so, one of the things that I really like about our business is just the exposure we have to some really attractive end markets. You've referenced biopharma and biotech and healthcare space, which is, more than 60% of our revenues. And when I look at the health of those end markets, I think we're quite excited about, the long-term positioning of the space, really driven by, record levels of new drug approvals, pipelines that are as robust as they've ever been. And new therapeutic platforms, whether that be, cell and gene therapy, GLP-1s that have been getting a lot of attention. And so I would say the fundamentals for our space are really robust. And, as some of these headwinds that have been plaguing the industry that we just talked about, whether it be supply chain or, just some of the normalization coming out of COVID, as those things subside, I think we're really well positioned to, for a strong setup and to be able to leverage the momentum that's in our end markets.
So, one of the, I guess, just what's one of the bigger headwinds that you are facing here that you need to get, your hands around to kind of move this thing forward here? I mean, again, stock's done well, but what's a key challenge for you guys these days?
Yes, when we looked at some of the things that have impacted our growth in our industry over the last year or so, it's things like inventory destocking as our customers are normalizing their inventories. Some of the supply chain constraints, whether it be access to raw materials or even just our own production capacity that we've been able to debottleneck with investments. Or some of the funding constraints in biotech and things as the capital markets have been a bit challenged here over the last year or so. Those things have largely normalized when I look at the stability of the business in the back half of last year and into the early quarter here in 2024. I would say that things have largely stabilized, and the business, I think, is poised for a nice recovery trajectory here as we move through this year and into next year.
Before I let you go, we got Jobs Friday coming up. You got a blowout ADP. We had a super strong manufacturing ISM data. We got a good JOLTS number. How's your hiring front? Are you hiring? Are you not? What is it like to get and retain talent?
Yeah, I mean, you mentioned a lot of leading indicators there that I think we look at, and we also look at a whole host of other levels of activity in laboratories, funding, capital markets, the pipelines. I think we just kind of put all that together, and it does certainly signal I think strong momentum in our space, and has us incredibly optimistic about where things are headed. Talent is critical to us, and we're proud of the 14,000 plus associates that we have around the world that are focused on growing our business and serving our customers and helping enable some of these breakthrough therapies that are being developed. And we're continuously in the market adding capabilities, whether that be new capabilities to serve some of the new modalities like cell and gene therapy, or some of the digital capabilities around AI and automation. But we've got a global footprint. We're in 180 countries around the world, and so this is the heart of our business, our associates, and we continue to lean in to make sure that we have the right capabilities to serve our customers.
All right, Michael, thanks a lot. We really appreciate it. Michael Stubblefield, he is Avantor CEO, joining us from Allentown, Pennsylvania. That stock is up by 1.2% today, up 10% plus for the year. As I mentioned, 0 sells and 5 holds, 17 buys, 16 buys, something like that. A lot of buys there on the stock, with an average price target over the next 12 months for about $27.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern, on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.